All right, guys. In this video journal for my trade for last week, and by the way, today is Saturday, May 14th, 2022, I'm going to review basically just three things: entries, exits, and trade management in between. That's it. Okay, so going back to last week, I'm going to try to keep this video short. I'm not going to repeat myself about this entry. That's in another video. You can find it easily. By the way, actually, before I even go on, I got to say, if you're watching this video from YouTube, like not, you only found it through YouTube itself, and you're curious about LA wave theory, you've got to join ElliottWaveTrader.net. I highly, highly recommend it. It is the best place on planet Earth to learn about LA wave theory. Yes, there's a million other people on the internet. You can, and I've checked a lot of that stuff out. By far, it's not even close. It's no contest. ElliottWaveTrader.net is the place for your LA Wave education and for your professional analysts who are putting up charts all day long about all sorts of things, and they're covering a lot of different areas of interest: commodities, equities, small cap, large cap, technology. It goes dividend paying. It goes on and on. So whatever you are interested in, it's at ElliottWaveTrader.net. Okay. Now, so for the entry, this one I'll just talk about the exit. So last Sunday it was opening over here, and I was still in the trade. I ended up getting stopped right there at 108.23. So the way I manage the trade is I use Strat to get entry, but I'm only taking an entry using Strat based on the structure, which is being presented to me by Elliott Wave. It's by my own measurements of how I'm measuring stuff and using Elliott Wave, everything I've learned, just using it to figure out where am I at in the structure. Do I want to take a shot? Yes, no. If the answer is yes, I go to Strat. Simple. For trade management, I'm using structure. For the actual exit, I'm still using structure. Sometimes I use Strat for exit too. I always use Strat for entry, always. But in this case, the management was really easy. It just held this structure where I thought it would hold it. And so I kept raising the stops. Each time it would make the new higher low, I would just raise the stop. But only after it makes a higher low and holds it and keeps going, then I would raise the stop only. Because the worst thing ever is to raise your stops too aggressively and get stopped, and then it keeps going, and then I'm chasing, and it creates terrible, terrible mindset, terrible emotional condition. I do much better when I get a good entry and let the thing move. Give it room. Like if you know this is 5 up, you know it's going to come back. So unless you're scalping, if you're scalping, you raise your stops. Just sometimes I am scalping, and I differentiate the two because they are completely different ideas, and the technique is very different. So for swing trading, I'm letting it run. If I think I've entered at a good place in the structure, like a wave 2, it's going to run further than, say, a wave 4. And also, wave 4s are just really hard to get entries on. It's much easier to get an entry after a clear 5 up and 3 down. So anyway, get a good entry. That's the management. I got stopped out at whatever amount that is, $7 and something. So that was great. So I wanted to show you that exit because it was based on structure. So the next thing I'll show you. Now, I didn't trade for like a day or two because I'm busy doing other things, but the way it played out is after I was dead wrong. Originally, I had this as a 3-4. I was dead wrong. It came back. So, you just go back to the drawing board. So then I switched that to a 5, meaning maybe that's the top of a 5-wave move. And at the time, I remember thinking when I had this as a wave 4 that I didn't like that because it kind of looks impulsive. And in wave 4, unless it's an A, but this came up to, it just, I didn't like it, which is fine because that's, in part, that's why my stop was where it was because, it wasn't really loving this structure for wave 5, the beginnings of a wave 5. You want to see something that looks like a wave 3. If this, like over here, like that looks like a wave 3 of some degree, right? This looks like a wave 3, but over here, this doesn't look like that. This doesn't really look like there's a 3 in there anywhere on any scale. So anyway, blah, blah, blah. So once this 5 wave came up, I actually shorted that, which I wasn't really keen on doing, but I did. I'll just show you the entry since we're talking about entries and exits. So here's where I was thinking of shorting it, and I did. And you get that 3 candle, nice outside candle. I actually sometimes I decide on a stop before I've even made an entry. It's just a little exercise that I do, and then sometimes it turns into an actual trade. So in this case, I thought, I'm going to short this thing, and I'm going to once this came back, I'm going to put the stop at the top of that candle. So this came up, and almost I thought it was going to keep going, but it didn't. I said, let me wait one more candle. So I did. I waited one more candle. When this came up, I started trying to short it, and I missed getting it up there, and then it came back. Boom! I shorted it at 103.72. That worked out. I moved the stop to break even quickly. Then I moved it. I just kept moving the stop down because that was a scalp, and then eventually it had a nice drop, and I made $1.50 or something. But it was a scalp, so I took it quick. I took the gains right off, and then I immediately turned around and was looking long here. I actually caught $1 long. I had a stop out in there too, but I caught $1 long, and then it started coming back, and then said, all right, so time to get long for real in a swing trade. So this is where I thought in the structure that was here. That was excuse me. That was here. So that's right down here. That's structure. But of course I didn't see that until 6 a.m. when I get up. I started looking over here. So I like that structure for a meaningful bottom. So I wanted to get long, and I scalped it, and then it came back. But where it came back to was right at the 618. So you got to keep in mind, like where I'm at in the structure, I'm liking it. And it's also in the morning. I like it when it bottoms like in the morning. And if you have a bullish bias, like the structure was giving me a bullish bias, I like to get long. If the structure agrees and it's in the morning, I'll do it. I'm going to take the shot. So it came back to the 618. When that candle went up, just like I told you with the short trade where I defined my stop before I was even in the trade, I said, I want to get long. When this started coming back, I said, I'm going to get long at the top of this candle. And the next candle did open. It did come back, and I had an open order. And it didn't get filled until it opened at the next candle, and then it went up, and it triggered my long entry. All of this was in the LA Wave Trader room in a thread. So I did go long there, and I immediately moved it to break even. And then I thought I was going to get stopped out. I didn't. And then later in the day, I actually moved the stop to 104 even. Okay, so that's an entry. That's a good entry. I mean, you don't know it's a good entry at the time, but I'm making my entries based on structure. So it's worth taking a shot if you're at a good place in the structure. And then I use strat to make sure if I'm getting stopped, it's small losses. I rarely have a stop more than, like a huge stop for me would be like 60 cents or something. Most of my stops are like 8 cents, risking 14 cents, 30 cents, 20 cents, 8, like that. And then I move it to break even quickly as soon as I can. Okay, so there you go. That's my trade journal for entries. That's how I do it on the 5-minute. Trade management using structure. Exit using structure. So right now my stop is here for a reason. It's below in the structure where I don't want to see price come back. So in other words, if price comes back below all of this stuff and gets below there, I don't really want to be long anymore because I don't like that structure. So that's why my stop is there, right? And that stop would allow me to still gain whatever that is, 3 something. So let's take a look. I'm starting to get a little more meticulous with my bookkeeping trading because I don't trade as much, so I can easily keep track of it in my mind. But for this time, I actually put them in a sheet, in a spreadsheet. And so the current stop we have it would be 377 in gains, the one I just showed you. And at the moment, if I took it off like right at the open, that trade I would make 622. But the stop is 377, and for now I'm okay with leaving it there. But let's just add this up just to see what if I didn't do anything else. Then I would have made $14.62 of gains in crude last week. That's pretty great. I'm thrilled. Couldn't be happier. All right, guys. Hope this helps. Good luck, man. Make good entries. Management per structure. And make good exits too based on structure. Okay, guys. See ya. Good luck.